Hi, and welcome to my channel. For those of you new, these videos will be a mixture of tracking my journey and development towards financial freedom, about basic personal financial products, and also about improving people's financial well-being. My name's Dave and I work in financial services, and it amazes me the number of people I speak to on a day-to-day through my employment who do not understand the basics of personal finance because we don't teach the subject in schools, or in the UK we think the subject matter is taboo to talk about. Remember, if you like the videos in this channel, press the like button, subscribe to this channel so it can grow and reach a wider audience. Now let's get on to this week's video. So this week's video is a review of my SIPP account, my self-invested personal pension. It's something I do because it's very tax efficient, but more importantly it gives me the choice or freedom to create a pension pot which hopefully I can access within the next 5 to 10 years if I wish, and it will give me the option of early retirement if I so wish to leave my current employment. But it gives me control. I can choose the level of investments, I can choose where them funds are invested, or which shareholdings I wish. It gives me flexibility. Now I do have a defined benefits pension scheme with a previous employer, 20 years service, but although it's guaranteed, somewhat restricted, cannot access to 65, and I do have an auto enrolment scheme with my current employer. I pay in 5%, they pay in 3%, but it does have very limited funds, very limited options. For those of you new to him, the aims for this portfolio is an annual growth rate of 10%, dividends this year of £3,000, and hopefully a year-end value of £90,000. I say it's to access the next 5 to 10 years. It's not a get-rich-quick scheme, it's a long-term journey to access between the age of 55 and 60, but it gives me the choice or freedom if I so wish. Have a look at the graphics. A very good month so far. We started the month at £86,473. We finished at £89,889. A monthly profit of £3,416. Year to date, very nice position, £16,169 profit. Up to the end of April, we were up 19.22%, and the end of May, year to date, up 23%. So well above our predictions of 10%. Hopefully the market will continue. There may well be some let off or some reduction in the values, but a very positive start for the portfolio moving forwards. Now for the month of May, we put in our normal contribution of £100. The government have topped it up with 25% tax relief. And if we can look from the following charts, some very good dividends. Our best month to date. We received from Aviva £541.10. We did reinvest and topped up with additional 128 shares. We received £116.39 from Drax. Again, we reinvested 26 shares. And we received a very nice dividend from Lloyds Bank, £176.42, 357 shares. And we did also receive a dividend from Legal & General, £52.96, but we decided not to reinvest it because of the amount in question. We put that into another share we are looking to grow. I say, for the month of May, dividends of £886.87, year to date £1,331, so well above our expectations of £3,000 for the year. Our provider has charged us monthly fees of £13.65, and if we look at the portfolio, we have a total of 17 shares, 9 in profit, 8 in loss, predominantly based in financials, cyclical services, but it makes up 81% of our portfolio, of which 67% is in the FTSE 100 and the remaining 14% is in the FTSE 250. As we can see from the portfolio, 87% is based in the UK, 11% is based in the US, and 2% is in Asia. If we look across our shareholdings, I'm not going to run through all 17 shareholdings, but just to give you an idea of the largest shares we hold and the reasons why we hold them. So our largest holding is Aviva. We own 3,993 shares, £60,500, 18% of our portfolio, in profit of 4%, but we did make £400 profit during the month. Again, a very long term holding, very good dividends moving forwards. Our next biggest holding is Lloyds Bank. We own 31,318 shares, £15,500, 17% of our portfolio. Finally in profit, but during the month a very good return, £1,400 profit at its highest point for 12 months. Our next shareholding is Greggs. We own 266 shares in Greggs, £6,600, 7% of our portfolio, up 100% since we bought it. It did have very good trading results during the month of May. 31 stores opened, a total of 2,100 stores, but it's gone away from the high street. It's going into retail parks, forecourts, and it reckons profits will be back to 2019 levels very soon. The day of the results, the share price actually increased by 12%, and hopefully moving forwards it will restore dividends and hopefully special dividends, but an excellent long-term growth in the UK. Our next shareholding is Barclays, 2,797 shares, just over £5,000, 6% of our portfolio, a slight loss of 1%. Hopefully, just like Aviva, Lloyds, the banking sector will recover, dividends will resume, margins will increase, but a great long-term holding. And our next largest shareholding is Drax, the biomass producer, 1,156 shares, £5,000, 6% of our portfolio, and that very nice profit of 69%. Hopefully moving forwards has been our recent buying spree. Profits will increase, dividends will increase for a long-term hold. And our final share makes up over 5% is JD Sports. 500 shares, £4,700, up 150% since we bought it. A great retailer, has a very good high street presence, a very good online presence, and it has been on an acquisition spree the last few months. And other shareholders we do hold, we own BP and Shell, the oil producers. We own Sainsbury's and Morrison, the retailers. We own Pennon, the water company, Card Factory, and then down to our smallest shareholding, John Menzies. 252 shares, £787, 1% of our portfolio, a loss of 21%. Has been really hit the last 12 months through the pandemic and people lacking of flying. Hopefully moving forwards, flights will take off. They've got some very good contracts in the UK and the worldwide airports. Hopefully we'll come back to some kind of normality when flights can resume. So that's a summary of our 17 shares. As we said, 9 in profit, 8 in loss, but all long-term shareholdings we aim to hold for the next 3 to 5 years. Okay, unless fundamentals change or something severely happens to the company. And during the month we topped up one of our existing holdings. We purchased 43 shares in HSBC for £197. Makes up nearly 5% of our portfolio, but a worldwide banking presence. Hopefully dividends will be resumed on a quarterly basis. It was bought for recovery, but it was also bought for long-term dividends. So that's a summary of our shareholdings. Now moving on to our funds, we own 6 funds in our portfolio. All 6 funds are in profit. Our funds make up 19% of our portfolio, okay, spread across numerous sectors. Just a brief overview of the funds we hold and the profits and the percentages to date and the reason we're holding them. Our largest fund holding is Legal and General Technology Fund, £4,200, 5.1% of our portfolio, a very nice profit of 39% since we purchased it. It was above 50%, techs have had somewhat of a reduction lately, slight stall, but ultimately a long-term shareholding based upon the tech sector in the US. They've got obviously, shall we say, a lot of market capital construction. They've got a very good moat. They're not going anywhere, but obviously the so-called taxes are going to implement them in future. So somewhat stolen, but a case a long-term hold and hopefully will improve and increase in value moving forwards. Our next fund holding is Bally Gifford Positive Change, £3,400, nearly 4% of our portfolio, makes up 23% profit to date. Very few shareholdings, but very good quality companies. Quite select, quite niche, but as we see from the performance for the past 12 months, very good profits, and hopefully good companies will recover and regain market shares because of what they do and the positions they've got. Our next holding is a global equity fund, £3,100, 3.1%. Again, reduced in value the last month or so, but was still in a profit of 4%. It was bought to diversify our portfolio and predominantly get us away from the sole emphasis where we were a UK based portfolio. So it was done for diversification. Our next fund holding is the US smaller companies, £2,700, 3% of our portfolio, showing a very nice profit of 35%. Very passionate about the US. I think it's got great growth potential, especially smaller and mid-cap companies. Okay, so the reason why it's bought it, again, a long-term shareholding, will hopefully carry on with the growth rates moving forwards. Our next holding is Linsell Train UK Equity, £2,600, nearly 3% of our portfolio, up 5% since we bought it. Struggled the past few months because of its select holdings, but the track record speaks volumes. Between 10 and 15% average return on year, but it was bought for that reason. Okay, and its past performance. And finally, our smallest holding is a UK smaller companies, £1,100, 1.2% of our portfolio, and a profit so far of 7%. It was hopefully bought to give us greater diversification in the UK, but ultimately I think smaller companies will grow much better than the FTSE 100 companies. But it was bought for that sole reason, again to diversify and hopefully give us greater returns for companies in future in the UK when the pandemic disappears and we go back to some kind of normality. So as I said, the fund is in a very good position. All 6 holdings are in profit, and all of them, just like our shares, are bought for long-term holdings. And moving forwards, we will hopefully aim to more diversify but top up our existing funds unless the characteristics change from that fund or management change or sentiment may change. So as we see from the portfolio, 23% across the board profit year to date, exceeding our expectations of 10%. But as we said, it's a marathon, not a sprint. It's not a get rich quick. The idea is to grow a portfolio and access between the next 5 to 10 years if you wish, and hopefully through the growth of 10% year on year and the increased dividends, the funds and the portfolio will be in a very good position when we do access. Now remember, if you like the videos, smash the like button, subscribe to the channel, and we'll see you again soon.